Hello dear traders, you are watching a recap of the Asian session. Market sentiment was quite positive in today's Asian session. Asian stock indexes were mostly up amid hopes for a diplomatic solution to the conflict between Russia and Ukraine. The Nikkei index rose by 0.9%, while MSCI Asia Pacific index dropped by 1.6%. US Treasury yields also advanced, pushing the US dollar higher. As a result, the greenback reached a 5-year high against the yen. One of the main events of the week will be the Fed's meeting. The US dollar kicked off the week with a modest gain, however it traded flat versus its main rivals during the Asian session. Analysts believe that the US currency is likely to remain in the narrow range for some time. At the same time, the likelihood of an upward movement is quite high, given its current dynamic and fundamental factors. The next resistance levels are located at 99.97 and 100 points. Traders are cautious ahead of the Fed's meeting. They are refraining from opening extra positions. The regulator is widely expected to hike the key rate. Inflation expectations in the United States reached a new all-time high. The indicator even exceeded the Fed's target. Thus, inflation concerns may force the Fed to raise the key rate by 0.50% at the March meeting. Fed funds futures signal at least 6 or 7 increases this year to about 1.75%. If so, the US dollar index will be able to consolidate near the highest level of May 2020. The yen looks even weaker. On Friday, the greenback climbed significantly against the yen after the US dollar index grew by 0.62%. Today, the dollar-yen pair extended gains, consolidating above 117.20. This is why there is a high chance that the price will reach a high level. The next target level is located above 119.50 and higher. Even though the yen is a safe haven asset, it's unable to assert strength. The main reason for this was a large increase in the US government bond yields. Additionally, the Bank of Japan's yield curve control program does not allow Japan's government bonds to follow the increase in the other global government bonds. The Bank of Japan is also in no hurry to tighten monetary policy like other major central banks. For this reason, the dollar-yen pair is expected to continue its upward movement. However, bear in mind that the instrument is overbought, and this is why some analysts doubt that the price may reach the range of 119.50 and 119.90. The pair could also nosedive following a decline in stock indexes. Currently, markets are calm, yet volatility will increase considerably on Wednesday ahead of the Fed meeting. The Australian dollar is also facing bearish pressure. It closed last week with a drop of 65 pips despite a slight increase in the risk appetite. Risky assets grew following Vladimir Putin's comments that the negotiations with Ukraine brought some positive results. At the same time, European and US stock markets entered the green zone. Today, the Asia showed a modest decline of 0.6% during the Asian session as the US dollar strengthened. The economic calendar for Australia remains empty, and this is why the current trajectory of the Aussie will largely depend on the greenback. The Australian dollar also looks overbought. Since the beginning of a rally in the commodity markets, it has soared considerably versus other world currencies. So it's not surprising that now it's experiencing the steepest fall. Analysts believe that it will soon slide below the nearest target level of 0.7227. After that, it may decline to 0.7065, a high of June 2020. And tomorrow, market participants will take notice of the release of the Reserve Bank of Australia's meeting minutes. Reserve Bank of Australia Governor Philip Lowe hinted at higher interest rates as the rising commodity prices put pressure on the central bank. It needs to hike the benchmark rate to control soaring inflation. Low also said about the possibility of a rate increase in June. However, it's not certain yet. And this is the main news of the Asian session. Subscribe to our channel and keep close tabs on the market situation. Feel free to leave your feedback and see you soon.